Hey, good afternoon, everyone. This is Trader Tim from eminimind.com, and today we're doing a trade recap video. Going to look at some interesting things that happened this week. Talk a little bit about the market profile and how we can kind of play some of these setups when we get into a market environment that is in the process of changing trend. So on the daily chart here, we're going nicely, gapping up very strong last week. And as we came into this week, there was this slowdown the first couple of days where, yes, we were still making new highs, but we weren't going into new highs by quite as much. The move on Monday was a small move to a new high. Tuesday, we made another new high and then kind of closed right around where we opened. And then Wednesday, the first day where we broke the previous candle's low, that was a pretty big day, significant. But then today, the market just taking that all right back with another gap up and a nice trending day. I didn't draw up this daily long really until Wednesday. Um, Normally, I don't use a gap as a anchor point. But in this case, we really had nothing to go off of in terms of, if I come all the way back down here and pull from this swing low at the end of December, we're a long way from that 50%. So that was really the only support line that I could find. And today we ran right to the 2770. We are very, very extended off of this trend line support here. And so at some point, likely next week, we should start seeing some, kind of sideways consolidation again. Even if we go up for another couple of days, at some point we're going to have this consolidation occur. And when we do, those are days that can be kind of challenging to trade. We saw on Tuesday and Wednesday, and even today, there was some movement, but there weren't really a ton of opportunities to get in. And that's oftentimes what happens when we get up near, not, I wouldn't call it the end of a move, but after we've made a big move, now all these people up here who've been long, they need to get out of their trades, and some of them are taking profits. And when you have this rollover of or changing hands of people selling up at highs and slowing down the breakout, slowing down the buying, sometimes you can get some funny things that can happen. So before we pull up the chart, I'm going to bring over my market profile chart, and I just posted this in the dashboard. So if you're a VIP member, you can grab this there. So market profile, just kind of giving us an idea of where the trading occurred throughout the day. So each column is 30 minutes of trade annotated by each letter. So we've got A to start the day, and then B is the second 30-minute bar, C is the next 30-minute bar, and you just go throughout the day, and then you compile all the letters, and that gives us this sort of, sometimes it's a bell curve, sometimes it's, you get these double distributions and so on. If you Google market profile over at E-mini-Mind, you can pull up my tutorial guide on that. But what we've been seeing, so we've got each day here marked from the beginning of the year on. And then these darker black lines, that's the value area. That's where most of the volume took place. 70% to be exact of the volume for each day kind of took place. So I use market profile to give me a gauge of kind of where we're at and what are some key pivot levels in the market. And you'll notice a lot of times, especially this last week or two, as we've been moving higher, any pullback that we do get into the previous day's range tends to reverse when we come down into the top of value area high. We come down, and that's really as low as we get for the day. And then over here, we come down value area high, and that's really about as low as we get, and then we rally. Same thing on the opposite side when we've gapped down. When we rally up, we run up towards the value area low, and that acts as resistance. And so those are areas, as we head into Friday, for example, if we were to gap up again, I would look for maybe some support around 27.65s. If we gap down, maybe some resistance at 27.57s. They're not hard lines in the sand, but just some areas that I like to watch for. And so, kind of keeping that context in mind, we can see that a lot of the action that we've had has been a move up and then kind of consolidation into this nice bell curve. And then the next day is another move up, another move up. Here's a double distribution day where we have essentially two areas where the market spent a lot of time trading. And so to kind of use this as a gauge of market sentiment and where is a lot of the trading activity occurring, when we go back to the chart, in situations like this where we're just going straight up, at least it gives us some intraday support and resistance levels that we can look at, because we don't have any resistance back here or support to bounce off of, since this is all new territory. So one of the things I want to point out from yesterday's trade, so on the 512 tick chart, if I go back to my market profile chart here, so this is yesterday right here, and we came down and we had the value area high from a couple days prior, 27.3650s. So knowing that that was a value area high, when it came to the chart, in the morning as we were moving down, we had a couple of things happening yesterday. I'll talk about the short setup kind of right off the open, about 15 minutes afterwards. But first, as it relates to value area high, was just below what ended up being the low for the morning. And so when I know that there's a value area below me or some sort of support, when we get these small setups where we're in a downtrend, we break the swing high right here, it gives us a nice opportunity to take a long setup down at lows, and gives us some projection that, okay, yeah, we may not have traded at this level for days at a time, but there was some support here a few days prior, where at least we traded at that level for a period of time that was able to establish some intraday support. If I back up a little bit to the morning, this is a situation that happens more often than not, where we have a short setup like so, rallies, it's a little bit dirty, it trades down to the negative 23, but then when we draw the next setup, we get in this situation where, do we want to take the second setup using this anchor, this lower high, or do we draw from that original anchor down to lows? And so if you get in this situation, what I like to do is draw both and then look at the distance between the lowest 50 and the highest 61.8. If that's more than 6 ticks, and knowing that this previous short was a little bit dirty, meaning we traded into 61.8, I'll use the full halfway back as my entry point, or kind of split the difference such that my 6 tick stop stays above the 61.8. So that's kind of a helpful little tip, because sometimes, well, a lot of times I like to take my cues off of the previous retracement. If the previous retracement went exactly to the 50 and then exactly to the target, that shows that there's a lot of buy-in, there's a lot of selling right at the 50. Computers are using, these same anchor points. But if it's a little bit dirty like this, then I'm okay. Instead of being aggressive and taking the second setup, when they're this close, I'll just go ahead and draw the full and then enter a little bit higher. Sometimes we get into situations where we have a long trade and a short trade. And you say, well, how do I know which setup to take? Well, what I like to do is if I draw up a short and the short trades first, then that becomes the trade that I take. So if we were to draw up that short and then draw up this tiny long, it's just whichever one trades first. And so sometimes, actually, I think this happened today. Let me move forward to a better example. Oop-de-doo. Maybe it wasn't today. But in any event, let's say that we draw up a long setup. Get that right anchor point. Let's say we draw up this long and we're only right back here during the day. We haven't come down and touched that 50% yet. Well, if we're on the way down and we break a swing low, then I'm okay taking a short down into the bigger long. But if we come straight down and touch that 50%, now the long is in play. Thus, I couldn't take a short because that would involve me exiting the trade. So when you get into situations where you're kind of asking yourself, well, do I take the long or do I take the short? It's just whichever one trades first. Or if you get in a situation like today, where in the first 15 minutes we had a long set up, it didn't make it to its target on the first push. It retested. Well, if you're not in this trade and all of a sudden you notice that, hey, we broke right over here, we broke this previous swing low, well, you don't want to just draw up a short because this trade is still open. You have to look at it as, okay, if this is the first drawing that you drew today, whether you take the setup or not, until it reaches the target or breaks the 61.8, this trade is still active. And so if you are, it can be challenging sometimes looking at the market in hindsight if you weren't around in the trading day, because you can miss some of those things that, when you're trading in real time, you see things a little bit differently. So it's helpful to go back at the end of the day and go through the market and then sort of jot down all of the setups, all of the good setups that you see. And sometimes a good setup can be a losing trade, but if the setup is still good and valid, then you got to take it. And then you compare those trades that you've looked at in hindsight, now that you've have more data to look at, with the trades that you actually took. And then start to see, okay, well, what little mistakes am I making? What common things, what is it about those winning trades? Do they have any common characteristics? Or do the losing trades that I'm taking have characteristics that I could use to eliminate placing those trades? So that's a little bit of insight on how I use the 512 tick chart with the market profile and develop some context when we're just in this kind of straight up market. And remember, when we're going from a uptrend to a sideways trend or a downtrend to a sideways trend, that transition can be a little bit challenging. And sometimes the market is moving, but it's not giving you, quality entries. And I'm really not concerned about, missing some sort of move if there's no entry present, or at least if there's no low risk entry present. You don't want to develop bad habits just to try and chase a move, and then all of a sudden you get stuck in a downward spiral and things start to unravel. So I hope that was helpful. If you did find it helpful, give the video a thumbs up, and we will be doing another live trading session on Tuesday. You can check that out as well as the market profile chart over at emoneymind.com/VIP. Thanks. Have a great weekend.